Here is a summary of the U.S. stock market for the week of August 4, 2025, and a preview for next week. The market recovered strongly, completely erasing the losses from the prior week. The Nasdaq Composite was the leading index, achieving several new record highs. This rally was primarily fueled by two factors: excellent second-quarter earnings from major technology corporations and a growing market consensus that the Federal Reserve will lower interest rates in September. However, we are observing a significant split. Corporate profits are robust, with the S&P 500 earnings growing by nearly 12%. In contrast, economic data, such as the July employment report, was notably weak. The market is essentially forecasting that growth from artificial intelligence and supportive policy from the Federal Reserve can overcome a cyclical economic slowdown. This creates a fragile equilibrium, and attention now turns to next week's inflation data, which will be a critical test for this market narrative. Let's examine the performance figures. It was a positive week for all major equity indices. The Nasdaq led all indexes with a gain of nearly 4%, increasing its year-to-date performance to over 11%. The S&P 500 rose by almost 2.5%, and the Dow Jones Industrial Average posted a solid gain of 1.33%. Of note, the 10-year Treasury yield increased slightly. The VIX, an index often referred to as the market's fear gauge, declined by over 25%, indicating a significant return of investor confidence. The primary outlier was WTI crude oil, which fell by more than 5% due to concerns about slowing global demand. This chart clearly illustrates the story of the week. You can observe the Nasdaq consistently outperforming the S&P 500 and the Dow Jones. Although all three major indices concluded the week with gains, the rally was unmistakably driven by the technology sector's momentum. This created a performance gap that highlights the market's current dependence on a narrow group of leading companies. This is how the week's events unfolded. Monday was a classic buy the dip session, where investors re-entered the market following the prior week's decline. The rally paused on Tuesday as concerns about trade tariffs and a weak services sector report came back into focus. By Wednesday, however, strong earnings from companies related to artificial intelligence restored bullish sentiment. Thursday's session was mixed, but a late-day rally still propelled the Nasdaq to a record high. Finally, on Friday, the market concluded the week on a strong note, with the Nasdaq achieving another record high. Now, let us discuss the challenges facing the market. The most significant headwind remains trade policy. The implementation of new tariffs is creating uncertainty and tangible cost pressures for corporations. In fact, the average U.S. tariff rate has now reached its highest level since 1933. This factor, combined with a weak July jobs report and slowing activity in the services sector, suggests an economy that is clearly decelerating. Given these headwinds, what was the reason for the market rally? The answer relates to the Federal Reserve. In what is often called a bad news is good news scenario, the weak economic data has strengthened the market's conviction that the central bank will need to lower interest rates. The probability of a rate cut at the September meeting has now increased to approximately 90%. Investors are positioning for these easier monetary conditions, which they expect will support the economy and the market. This week's performance was truly a tale of two markets, as illustrated in this sector breakdown. Information technology and communication services were the definitive winners, powered by the ongoing boom in artificial intelligence. Conversely, more economically sensitive sectors, such as energy and financials, lagged behind, reflecting the broader concerns about a potential economic slowdown. Examining individual stocks, we can see this divergence clearly. The winners list is composed of technology and health tech companies that reported strong earnings, such as Palantir, which increased by over 21%. The losers list features companies that provided weak forward guidance, were negatively impacted by tariff concerns like The Trade Desk, and in the case of Eli Lilly, reported disappointing clinical trial results, which demonstrates how forward-looking the market can be. The foundation of this rally has been a surprisingly strong second quarter earnings season. An impressive 81% of S&P 500 companies have reported earnings and revenue that exceeded analyst estimates, a figure that is well above the historical average. As the chart shows, overall earnings growth is tracking at nearly 12%, which marks the third consecutive quarter of double-digit growth. This corporate resilience has provided a key pillar of support for the market. Let us now focus on some of the key technology earnings that shape the market narrative this week. AMD and Supermicro both confirmed the immense demand for AI-related hardware. Palantir demonstrated incredible growth in its commercial AI platform, causing its stock to rise over 21%. In contrast, Snap disappointed with weak revenue and forward guidance, reflecting intense competition in the digital advertising market, and its stock fell 12%. In the healthcare sector, Eli Lilly reported strong sales for its existing products, but its stock declined by 14%, following disappointing news on a future product, which demonstrates how forward-looking the market can be. Looking to the week ahead, the primary focus will be on inflation. The market's entire narrative of a supportive Federal Reserve is dependent on inflation remaining under control. If the upcoming Consumer Price Index or Producer Price Index reports are higher than anticipated, it could completely undermine market confidence and potentially trigger a sharp sell-off. If the data indicates cooling inflation, it could serve as a catalyst for the rally to continue. Here are the key dates for investors to monitor. The main events are the Consumer Price Index, or CPI, on Tuesday morning, and the Producer Price Index, or PPI, on Thursday. We will also receive an important update on the health of the consumer with the retail sales report on Friday. While earnings season is concluding, several important reports remain. We will gain insights on consumer health from EMC and Tapestry. Additionally, key industrial and technology bellwethers, such as Deere and Applied Materials, will provide perspective on global demand and the state of the semiconductor industry. In summary, how should an investor approach this market? First, the focus must be on inflation, as it is the most critical near-term catalyst. Second, be mindful of concentration risk. The rally has been led by a very small number of large companies. Third, recognize that market valuations are high, which suggests there is not a large margin for error. And finally, be prepared for a potential market rotation. If the inflation outlook changes, capital could shift quickly from growth stocks to value-oriented sectors. For viewers who wish to conduct further research, all data and sources utilized in this presentation are listed on the corresponding slide for your reference. This concludes our weekly review. It's a complex market with many interconnected factors, but staying informed is the most effective way to navigate it. Thank you for watching, and we wish you a successful week of investing.